Hey everybody, sorry that Sunday's show is happening on Monday, but I was busy with other stuff over the weekend, not taking time busy with other stuff, and we'll talk more about that soon. So first of all, let's jump in, and of course the clicker doesn't work, I forgot to test it. Big show today, and thank you all for being here. Big hugs to everybody, happy Monday. And if you are anywhere near the West Coast, you'll notice winter has actually hit in a little bit. Well, let's talk about everything we've got to chat about today and make sure I got the right thing. We're going to talk about all the top questions from the Patreon community, Bitcoin custody and a new trick, CBDC prepping, what to do, how to downsize, what's happening with debt and the world. We're going to talk about some really cool stuff around how Avalanche compares to other layer ones. We're going to talk about ETH Sharding. We're going to talk about some new projects that are launching on Solana and a whole bunch more. So let's just jump in and make sure I got everything. And disclaimer, none of this is ever financial advice. And where these questions come from, keep getting asked. I get asked a lot, where do I ask these questions? How do I ask these questions? Well, if you come into Patreon, investor level or higher, we have lots of spots open due to the bear market. And it's funny because it was closed for the longest time. But anyway, it's a place where like-minded people can band together to help each other. I'm just one person in the community, but everybody that comes in really helps each other. It's a very powerful flywheel effect. And a big thank you to everybody in the community. It's not the power of one, but the power of thousands. And we're also in heavy build mode. We've got some exciting things coming because that's what you do in the bear market. You build. That's one of the reasons probably Alex is tired, but we have really good things coming. But let's jump into the first question. And this is from Martin Hu. I am having a godchild and need a present. I would like to get him some Bitcoin, giving his parents half the seed phrase and the other half when he is 18 years old. Is it too long term, or do you think Bitcoin is good for this distance? Super interesting question. Before we jump into a really cool solution for that, this is a time for a lot of self-custody, a lot of time to make sure you have everything off the exchanges. There's some more smoke, even though there might be only a 1% chance after everything we've been through this year. Be very, very careful. Be your own custodian. But let's talk about timeframes too. Like if you're going 18 years out or 10 years out, it's very difficult to tell where things are going to be. But it might be a very good idea. So first of all, there are a few risks related to your strategy. And I don't think you are giving Bitcoin to your godchild can go the distance. Of course it can, but there are risks, especially with how you plan to split up the seed like that. That is the number one item. It's a huge risk that you lose the order of the seeds. And this is why we are not a big fan of cutting up the seed words and putting them in different places. When you go back to assemble them again, if you mess up the order, your Bitcoins are lost forever. Everybody, I'll repeat that. Do not mess up the order of your seed. Now, also, some math here. If you have 12 words in your seed, there's actually 479 million ways to order 12 words, 12 factorial. With 24 words, there are 620 sextillion ways to order the words, 24 factorial. You will not figure this out. So the second risk is you're risking that both your godchild and his parents won't screw up over the course of time. Say your godchild is 10 years old, that means you have to trust that over the next 8 years, they won't lose the seed words. And that's a lot of time. A lot of stuff can happen. A lot of catastrophes can happen. And just be careful of that. The third issue is the seed phrases are too exposed. When your godchild and his parents, the seed, how can you ensure that they will take the proper steps to secure it? If one of the parties isn't careful, you risk exposing the seed. But the good news is we have a little answer. And there's a cool little trick. And that is a strategy centered around time-locked addresses. And Bitcoin has the ability to be frozen in a time-locked address. And these addresses restrict the spending of the Bitcoin within them until a specified future time measured in block height. That means that you can set up an address that is set to unlock, for example, on your godchild's 18th birthday. And that means any Bitcoin that is sent to this address is locked from being spent until that day. And most of the major wallets have this ability, including Trezor and Ledger. So check it out. And in full disclosure, I actually use both now. Now, the better alternative for your strategy here is this. And first of all, really implement this properly. First, generate a time-locked address in which will unlock your godchild's 18th birthday and send bitcoins to this address. Take the private keys to that address or the seed to the wallet and encrypt it. Then put the encrypted keys into a trust and have the trust be made available to your godchild on his 18th birthday. These aren't that expensive or difficult to set up. And encrypting the keys and putting this into a trust means that even if the trust provider looks inside the file, they won't be able to do anything with it because it's encrypted and they don't have the password. And give the password that you use to encrypt the keys to your godchild's parents, or if you can trust them enough, give it to your godchild. And keep a backup of the password to decrypt the keys in case they lose it. And when your godchild is 18, he will be able to access the trust and retrieve the encrypted keys and use the password you gave him to decrypt the data. Then use the keys to unlock the Bitcoin. And this strategy is a much better way to do it. You have mitigated risks and, again, fun time. I really like the way you're thinking with this. What a cool gift. And I hope many others can actually do this. But remember, have your security tight. So next question is from Justice Will. Your opinion on ETH surge update with sharding possibilities. Could it seriously threaten the current Sol moat regarding scalability and speed? Wow, what a good question. First of all, a quick refresher on what surge and sharding is. The surge is a series of Ethereum improvements that will pave the way for Ethereum sharding, which will greatly improve scalability of the network, because right now at 15 TPS, it's not going anywhere fast. And the idea behind sharding is to split up the network into smaller, faster shards. Imagine breaking a piece of glass and it becomes thousands of little pieces of glass. That's the easy way to think about it. And this will make the Ethereum work synergistically with layer 2 rollups by splitting up the burden of the handling large amounts of data that need to be rolled up by the entire network by storing the data across different computers, little shards. And this will also help horizontal scaling because little shards will require less power and can be run on more nodes. And that also makes it more decentralized, which makes it much easier for people to run a validator. And eventually the goal is to allow running validators on personal laptops, maybe even powerful cell phones in the future with lower hardware requirements. Sharding will make it better for everybody as we go forward. And the most important thing is the smaller the shard, the more decentralized the network, and the smaller the attack surface area, making the network more secure. So lots and lots of goodness. Let's get back to kind of where you are with your question. Is ETH with sharding a Sol killer? So here, the improvements are expected to be as follows. Ethereum today is 15. They say 40, but I haven't seen more than 18 happen. TPS. Rollups can run at 1,500 to 4,000. Rollups with sharding in the future, maybe 100,000 transactions per second. But this is the thing. Solana's proof of history already does 60K. And can go up to 700,000 transactions per second. I'll talk about a demo in a minute from the weekend of how they did 1.2 million TPS in a demo at a conference live. Now, the ETH merge just got off the ground. Surge is not expected to be fully implemented till sometime late 2023. So it'll be a long time coming. And knowing ETH, sometimes things take a lot longer to get into the actual pipe. So it could even be sometime in 2024. And you can bet there will be hiccups along the way, just like how Solana's had their hiccups at scaling. But again, they're very confident they're solving those. In fact, as a quick demo at the conference in Lisbon, you say, here, you're not ready. Absolute gigabrain, head spinning, blah, blah, blah. Firedancer took Solana to the next level. Forget 50,000 TPS. Let's do this. 1 million TPS. This was 1.2 million raw transactions per second. It was 600,000 transactions per second after deduplication. And this was Kevin Bowers running the Jump Firedancer demo with a synthetic load that resembles a real Solana validator recorded live on stage at Solana Breakpoint. So again, the goal of 100,000 TPS for Ethereum is already 6x on Solana in a conference environment. So with that, I'm not concerned. And we'll talk more about Solana in a minute too, with all the other good stuff happening. So next question is from Barto, looking to speculatively accumulate some alts during this bear market. Can we get your take analysis on Avalanche? Yes, you can, of course. First of all, we have a number of scoring models that we use. First of all, is the Crypto Compendium score that looks at many different factors, particularly around tokenomics, centralization, security, regulation, regulatory risk, etc., etc. And Avalanche ranks 16th out of the top 20 SCPs, the smart contract platforms, layer ones, whatever you want to call them. They did not do well on the Compendium score. We have a second model that ranks the SCPs against each other across 20 different variables, and here it does a little bit better. Avalanche ranked 6 out of 20, the top 20 layer ones out there, with a score of 5.8. So both are kind of good. We have a combined composite score that it takes Avalanche down to about number 9 or number 10 on the actual list. Now, Avalanche inflation, let's look at one of the things that I never liked. I don't like inflationary tokens. No ifs, ands, or buts, because it brings about a lot of selling pressure. And it's very hard to make money when the tokens are being printed, just like the way we don't like fiat. So the inflation rate today per Messari is 23.21. I know people will debate me on that and say that's not real, but it's real. As a comparison, Solana has 6.37% inflation rate, and Ethereum has 0.54% inflation rate. This is where we are, ladies and gentlemen. It's very important to look at things not in isolation, but benchmark everything against everything, because that's the key. That'll help you discover the winners. There's another couple of things I uncovered in researching this. This was the Avalanche validator count fell from 1,629 to about 1,224, just in the space of about 6 months. That is exactly a 25% drop in validators, which means it's becoming less decentralized. But I don't know why this is happening. Maybe it's too expensive to run an Avalanche validator. I don't know, but it's not good for the Nakamoto coefficient either. Let's look at a couple of other factors. This is the daily active users and transactions per second. You see the top is the TPS, 44.5. It's about 3 times the speed of Ethereum right now, which isn't bad, 3x faster. But we just spoke about 600,000 transactions per second, but that's a separate issue. And daily active addresses, 40,836. That's on par with Cardano, and that's a lot less. That's less than 25% of what Solana is doing right now today as well. And this is a slide from 6 weeks ago, just to show you, to help you with your question, what would you accumulate during this bear market? Which alts? So here, this is one simple metric that I use. I call it the MC/DAU ratio, which is the market cap divided by daily active users to give you a price, and using the anchor point as Ethereum's market cap per daily active user to identify which assets are the most valuable. So I don't want to dig too much. Check out, I'll put the old video where I look at this. Again, it's from 6 weeks ago. Just look at DAU. Actually, if you just Google DAU, you'll see my video pop up. This is probably the most important thing you need to look at. And this is the most bang for the buck layer ones out there. Some of them are old, like the Trons of the world and Tezos, but you have Solana there, you've got Polygon there, you've got Harmony, Flow, Phantom. These are all cheap based on the price per daily active users. There's many other ways in which we value them, but that's a simple place as to where you can look to shop and what you need to think about accumulating. And again, you know what this channel likes and what we've liked since April 2021, and we have not deviated once. So, in conclusion to your question, there is no telling where the price action will go of a different crypto. Sometimes the market is not logical at all. You see, for example, Tesla is trading at a 18, 19 month low right now, and the amount of progress they've made over the last 8 to 9 months is mind-blowing. How can that be possible? I don't know. Markets are logical. And there are better layer ones out there than Avalanche, in our opinion, per our quant models. That's all we look at. We don't measure the strength of an army or a religion or a cult. We just look at the numbers and we try to forecast them out over time based on growth rates. So that's it. So with that, hope that helps. Next question From Crypto CPA, we have an accountant in the house. And he says there's a new project called HiveMapper. It's launching on Solana on November 3rd. And remember, these questions come from last week, so they're a little bit time sensitive. So this question came in 4 days ago. And what are your thoughts on this project and how does it score according to your compendium? And this is so funny. Just as I was about to go live, shout out to Paul Barron. He apparently is talking about HiveMapper as we speak. So these slides were done over the weekend, some of them. So Paul, shout out. Hope you're doing well. So when we look at some of the stuff that happened in Lisbon, it's mind-blowing. All of the stuff that's happening with the Solana blockchain, not pumping it, not chilling it, just stating facts, okay? You have things like, I think it's called Teleport, which is the new Uber version, running on a blockchain, running on Solana to help people find their cars. Their demo vehicles were at the Lisbon conference. You have Saga, the phone. The most important stumbling block for crypto adoption is wallet adoption. Having a phone integrated with you, with biometrics and whatever else, has that step embedded. And that could really catapult this blockchain and adoption into the stratosphere, getting to 1 billion users. And then you have Helium with partnership with T-Mobile, etc., bringing telco, internet to everybody. And there's so many other things. You've got the Google partnership and Google allowing people to set up a validator real cheap and easy. Early 2023, you got Facebook, Instagram with NFTs. Everything's exploding. But we're going to talk about HiveMapper right now. And what is HiveMapper? So HiveMapper, for all of you out there, it's a way of crowdsourcing, creating real-time maps. So everybody who's ever used Google Maps, you know they used to be Google cars driving all around the world, taking pictures of streets in 3D, so you could look at your house, you could look at your neighbor's house, you can look at whose car was parked out in front of it at whatever time, etc. Get a feel for neighborhoods and stuff like that. And that's what this is about. The mapping data is generated, is going to be used by people like insurance providers, real estate services, logistics companies, navigation and delivery apps, governmental organizations, etc. And HiveMapper wants to disrupt the global mapping industry, which is controlled by Google and Apple. And again, in a crowdsourced way, using a blockchain running on Solana. And every person, kind of like Helium having a Helium miner to distribute internet, they will have a dash cam device, which the user will place on the dashboard of their car. And the cam will continuously collect data about its surroundings and interface with other devices in the network as you drive. So it sounds pretty cool. But getting back to your question, we're in tokenomics. We'll get there in a minute. Just one more detail. This is an example that illustrates what the mapping data looks like. The more you drive, the more the dash cam collects data. And as a reward for your contributions to the network, you get what's called Honey. And Honey is HiveMap's native token. Pretty cool, pretty good name. So how does it work? So here, this is the HiveMapper architecture. You have the ecosystem, which consists of contributors who earn Honey by collecting mapping data. Once the data is collected, it's used to update fresh global maps. And as a reward for your service, contributors will be rewarded in that newly minted Honey. Then business entities will buy these maps through APIs and pay for them using credits, which correspond to burning of the existing supply of Honey, which increases their value. Sounds familiar with a lot of other things that go and burn forward. In addition, this is the brain behind HiveMapper, and it's built by the folks at Helium. Amir Halim, who is the founder of Helium, is also the founder of HiveMapper. And this makes a lot of sense because there's a lot of crossover between Helium's technology and HiveMapper. Both are in this whole IoT space, Internet of Things, networking space, and HiveMapper is quite well funded with the backing of Solana Ventures. Now let's look at tokenomics to get back to your question. And this is one of the problems. We weren't able to create a compendium score because there isn't enough data available about tokenomics, about the coin availability, about the supply. So it's really hard to gauge. And there's no data on CoinMarketCap or CoinGecko. But according to their white paper, Honey has a max supply of 10 billion, set to reach its max supply in the year 2108. I hope a lot of you will be around out there at that time. But the problem is in the next 4 years, there's going to be a lot of tokens being minted. And as you can see in this chart, Nearly 50% of the newly minted supply will be minted between now and 2026, and the token allocation isn't great either. Per the white paper, what we pulled out was it's about 20% to the VC investors, 20% to HiveMapper employees, 15% for system operations, 5% to the foundation, and 40% to the community. So you can see pretty much 60% is going to insiders with high inflation, and therefore it probably won't score very well on the crypto compendium, but that's where we are. It may be worth playing around with, see if you can mine some fast tokens to see if they're bought up fast, which could drive up the price if they're burnt. Who knows, but not something that I would touch, especially after seeing how hard it was for others to make money using helium. It started off good, but then after a while, it wasn't very lucrative. Thank you for the question. Next one in the box is from Squidgy Goanna. How would you personally deploy cash holdings before the implementation of a central bank digital currency to preserve wealth? Is more Bitcoin the best bet? So we think a lot about this over here because the pace at which stuff is happening. In fact, the Fed dollar, the US CBDC, just went through its first successful test. I know 80% of countries around the world, or even higher, are testing their SPY coins right now. But this is very quick and dirty. 6 steps that I'm thinking about of how you can prepare for dystopia. First of all, it kind of sums around hard assets first. Bitcoin, as you said, is the number one self-sovereign choice. Everybody gets some Bitcoin. Not pumping Bitcoin, just it's a safe bet. Second is, if you can, revenue generating real estate. And this is going to be critical as we go forward, because once the CBDC comes into place, it'll depreciate the value of cash in banks, and people are going to rush and scramble to invest in hard assets. One of them will be real estate, which I believe will drive the price of real estate up, especially revenue generating real estate, because if we do go to the SPY coin level, you're going to need cash to pay for things like food and go to the stores, Whole Foods, Walmart, wherever you go, some European grocery store, I don't know, to buy things. So you're going to need that cash flow coming in just to cover your burn, not protect your assets. Third is gold and silver. Obviously, good bet. I personally don't invest in either, but who knows? I do believe those types of hard assets will also go up fast with the advent of a central bank digital currency. Now, this next one is a little bit interesting. And it's something I think a lot about, is kind of if you go back in time and see how people dealt with each other in the past, they built up communities. And it might be good to start building up barter relationships. For example, you could get your haircut for somebody and in turn you give them a plumbing service, or you could trade food for electrician type services, etc., etc. The list goes on and on. Maybe you need an oil change in your car. You can barter that for something else. You can also sell services for Bitcoin. I covered that last week in last week's Q&A. Also, learn to be very self-sufficient and minimize your burn as much as possible, and figure out about how to bypass on-ramps. I also covered that in last week's Q&A as well. And start preparing for this, because this could be here in 2 years, and that's not a lot of time. So start thinking about that. Again, strange dystopian future. You will need some digital cash. Try get it through some open ways like revenue generating real estate or some other method. And then start thinking about bartering services. Could be accounting services for legal services, and on and on and on. So that's the way I'm kind of thinking about the future as we go forward. Next question is from, let me see, Cow's Squad. We want to sell our main residence, downsize, reduce expenses, invest in a small rental, and clear interest-bearing debts. Use the remaining funds to buy Bitcoin and ETH and hold for 3 to 5 years, but won't have funds until Q2 next year. Is this prudent to do, or will we miss the crypto generational buying opportunity? So we do have some, I know some people here in the audience who are real estate professionals. So first of all, my take on the market right now, selling now, it could be the worst time. So it is a buyer's market. It's not a seller's market. There might be an option for you to be able to find a cash buyer if you have very highly sought after piece of real estate or property. this could be an opportunity, but otherwise I believe you could be cut off at the knees. November to the end of January is historically the worst time to sell. It's also the time that I buy, believe it or not. So that's when I time my buys. There's a dearth of buyers because of Thanksgiving and Christmas and other holidays. And then we have this other whammy of the high in mortgage rates. So that perspective, selling now is hard. So put that into your calculus as you go forward. In terms of missing the generational buying opportunity early next year, I think you will still have lots of buying opportunities, barring a complete run on Bitcoin driven by central bank digital currencies. It all depends how quickly they are implemented and how fast things get adopted. But this is a simple Elliott impulse wave out to the future. And I do believe we could be at 63,000 by April 2024, which is approximately a year and a half from now. So there could be many opportunities for you to get Bitcoin close to 20K or under 30K, even in spring of next year. Again, not financial advice, but this is kind of where I see it going. And remember, after the halvening, or halving as some people like to call it, we expect to go a lot higher. But I think we could get back to 63 by spring of 2024. So the perfect playbook, in my opinion, for you would be do things like, if you do have that cash, you find that buyer, etc., do DC on steroids, build a nice portfolio of safe assets at good prices, for example, Bitcoin balanced by Tesla. Never have all of your assets in one asset class or even one asset itself, like Bitcoin. Who knows? It could be a double spend problem, or it could blow up, or it could be banned by the whole world. The other thing is things like Tesla. I mean, I get more and more bullish as every single day goes by on that asset. So think about some of that, not just crypto. And also you could add riskier assets in smaller proportions over time. We spoke about Solana, Ethereum, Matic, Google, Amazon, etc. And that would be a good way to build that portfolio and then be ready to exit in that 3 to 5 year period. I think the year 2024, 2025 will be very good for crypto, but then the latter half of 2025, things could slide down again. So we'll be ready for that as well. So I hope to be here with you all in 2025. Next question is from Uber Eras. We were just talking about Uber earlier. Are you worried about the stress that miners are facing? It doesn't seem good to me if large public miners are defaulting at the same time, although the hash rate seems to be up. Well, the hash rate's going up because the miners know where the price of Bitcoin is going to go. It's an arms race. So they are squeezing themselves out of the market, squeezing their margins just to be in position as they go forward. So just got a little warning on my machine that I need to clear some memory. Give me 1 second. This happened once before and move to trash. Otherwise, I think if I don't, it actually crashes the computer. Sorry about that. Live TV. But I did do a miner recap on July 13th of this year in my miner section when I looked at all the miners, and I was very worried about debt and very worried about capital efficiency. And basically you can see those miners with red were in danger. I did a subsequent miner video about a month ago. I still had CleanSpark as number 1, but I put in Core Scientific as number 2 because they were absolutely exploding their hash rate and they were mining a ton of Bitcoin, but they blew up. And Argo is also having issues, and they only had a little bit of debt. So when I look at this map here, you got Bitfarms and you got Marathon also looking a little bit red, a little bit scary. But I would not be concerned because these are Darwinian times, survival of the fittest. Those miners with no debt and access to credit can buy assets cheap. Those with debt and a capital inefficiency would probably hit the wall, especially if Bitcoin remains at 20K, because many of them are not profitable at this Bitcoin price level. And those at risk better hurry up and bite the bullet, because the cash that the buyers of those assets is going to run out soon, because so many are hitting the wall. In fact, I think it was CleanSpark picked up some Core Scientific assets real cheap, pennies in the dollar. So that's kind of the way to look at the world. survival of the fittest. Those that come out of this bear market will do very well, I do believe, and they will outperform Bitcoin too. Next question is from Hodlcopter. It's over a decade since Bitcoin and altcoins entered the space, and the SEC has done next to nothing. Why? Inaction simply says create anything like rug pull, vanish, and we won't do anything for years, if at all. It's a super interesting thing, but there's a slide I put in there, and this is, we are moving at the speed of government, ladies and gentlemen. And I'm not being offensive to government, but just government does work slow. I know there's many of you out there that like and appreciate the government. I just think they could do a better job, that's all. So let's talk about what they have done, because they haven't exactly been sitting on their hands, the SEC. They've been fighting with Ripple for years at this stage. I think it's 2 or 3 years. So they are doing something. The SEC has approved a futures Bitcoin ETF to the dismay of many people, but at least it's something. The SEC has also provided guidance for ICOs, the initial coin offerings, and classifications as a security. And the SEC has classified originally, this is an interesting one, that Bitcoin and Ethereum are not securities, but then Gary Gensler kind of went back on the fence regarding Ethereum as a move to proof of stake, considering like 2 or 3 big pools kind of control all the stake. So let's talk about where we are with regulatory framework. The reason the SEC and other regulatory agencies seem to have been so haphazard in crypto regulation is because they don't have a clear and comprehensive framework, digital currency framework in which to operate. And the framework needs to come from Congress. Now, there are 2 senators that are working hard on this. That's Senator Gillibrand and Senator Lummis. And they've been doing good work in pushing this. And they're very bullish on Bitcoin. But the problem is it takes a long time to go through because we're moving at the speed of government. Now, trying to regulate without an existing framework is just hard. It causes confusion, falls short, etc. And you end up having different agencies with different ideas of what cryptos are and how to apply those regulations consistently. For example, IRS treats cryptocurrencies as property. The CFTC regulates it as a commodity, and the SEC sees it as a security. Everybody's confused. That's the problem. So let's talk about the goals of the framework that is coming, hopefully, in 2023. And that'll bring a lot more money into the space, which will make the number go up for key assets. And the objective of regulation is about ensuring the promotion of fair and ethical business practices and protecting consumers. Yet the current regulations end up blocking individual freedom, infringing on privacy, stifling innovation, and harming consumers. And a proper framework to regulate crypto should accomplish the following: fight fraud without infringing on privacy of users. We saw a lot of that being violated very recently. Number 2, protect consumers through investment in education rather than limiting consumers' choices and freedoms. And number 3, encourage cryptos to be used as payments rather than telling people what or how they should be used. And encourage innovation rather than stifling it, because there's no doubt. I did a video last week about blockchain and where it's all going. There's no doubt it's going to be a part of our future. And that's it. Remember, though, we are moving at the speed of government. Tomorrow's election day in the US, so wonder what's going to happen there. Anyway, next question is from Paige. Super interesting one here. Why does a debt-based system require inflation to survive? Jeff Booth says, with deflationary productivity, the debt can be paid back. Otherwise, is there more to the story? Now, this takes us into a number of different rat holes, as they say. But first of all, it's quite simple. And some of this might sound very blunt and harsh, but it's the numbers. The problem is entitlements. Some people call it a welfare state built on debt. And there is no way to fix that right now, or probably ever, other than a great reset, which we've spoken about a lot. It's actually quite simple when you think about it. When you bring in 4.8 trillion of tax revenue and you spend over 6 trillion, your deficit is 1.x trillion every year. And how do you make that up? And then your debt of 31.5 trillion is growing every year because of these deficits. And the interest payments alone are exploding. In fact, the interest payments on this debt currently is nearly $750 billion. Now, politicians aren't going to cut spending or raise taxes to rebalance the budget. In fact, even if they raise taxes to 100% of everybody's income, they still wouldn't be able to dig their way out of this. There simply isn't enough revenue. And the only way out is to inflate. So let's look at a quick number here. This is, if this was a stock, it would be a great stock to own. But this is the up and to the right federal interest payments of $737 billion in Q3 2022. Big number, ladies and gentlemen. And you can see, that's why I talk about the Fed shooting themselves in the foot, because the more they jack rates, the more they increase their debt servicing cost for their own debt. It's like you having a mortgage and saying, you know what? I'm not happy paying 2% on my mortgage. I want to pay 6%. And I want to make sure my family has no food to eat. That's what they're doing. That's why many people, top economists, top finance people, find it preposterous what they're doing, especially when we look at where we are with inflation. Now let's talk about something else. The US has $172 trillion in unfunded liabilities. You've seen this slide before. $22 trillion that we owe in Social Security, $34 trillion we owe in Medicare, and a bunch more. And when you consider that only half the people in the US pay taxes, that means every taxpayer, every household, owes $2.6 million. And the average lifetime earnings of a family is $2.7 million. So there you are. That's $100,000 to live on for your entire life on average. And this is why we keep saying, anybody young today, any millennials, Gen Zs, you're being born into this huge amount of debt, and you need some type of escape hatch. And that is something like Bitcoin or some very fast appreciating asset. So let's get back to inflation. So let's say we want to get back to 0% inflation. In order to do that, you would need to raise the interest rate to at least the inflation rate, which is 8.6% officially. Take the 31 trillion in national debt, raise the interest rates to offset inflation would mean we would need to pay about 2.7 trillion in interest alone. That's 31.5 trillion multiplied by 8.6%. And to put this number into perspective, our current deficit is about 2 trillion. So we would need to double the entire budget deficit just to pay the interest. And you think that's crazy? Well, wait till you see the next slide. The Fed can raise interest rates by a few basis points here and there, but inflation is going to keep going up. In fact, the CPI inflation number you see isn't even real. It has the CPI inflation, true inflation has never been under 5% for the last 40 years. But they say it's always around 2%, which is just BS to begin with. And last time it was actually at that low back in the 80s. But today we've got this GDP, debt to GDP ratio of nearly 130%, and that's a problem. This is why the Fed is stuck way beyond the point of no return. In fact, this is a glimpse of the future. This is where we are. This is the ballooning interest costs, which threaten to crowd out important public investments. Just looking at this over the next bunch of years, nearly 40% of the government budget will be spent servicing debt. This is why there's going to be that big great reset button hit at some stage, because it's simply not sustainable and there's no way to escape it. But they are secretly a little bit of the way, just to alleviate the problem and elongate it and push it out, is inflating the way out of debt. So I hope that answers your question. It's a tough one. Next one is from Mr. Bon Vivant. What is your take on David Rosensberg's double dip recession like in 81 and 82? First dip in 2022 through energy and food price squeeze. Second dip through the Fed with over tightening. Until you brought this to my attention, I didn't really draw the parallel. I was thinking more back in time to the 40s, etc. But there's no doubt that you are onto something here, and digging into the Carter recession and how it was a different function is definitely on the same page. First of all, for those who don't know what double dip is, here's a very simple graphic that shows you have your business cycle peak, then we have recession one, that was the Q1, Q2 of 2022 in the United States. We had the brief recovery, and that was the GDP print of 2.6% last quarter in Q3. And recession number 2 is coming. And then we'll get back out. So that's where we are. That's where we are with the double dip. And in terms of, this is probably the easiest question. I totally agree. The first dip, I believe, was a supply side recession. And the second dip is the Fed breaking stuff. And we've yet to see the pain. Yet to see the pain of all the hikes we've been through. The last hike that happened last week, we will not see the damage until 6+ months from now. So it'll be, April, May 2023 before we see the effect of that hike. But I also believe the Fed is slowly recognizing this. And the beauty of this situation, because during the Volcker Carter era of 80, 82, they didn't have the history of this ever happening before. Our friend Jerome Powell does. He can point back to that time in history. So thank you for bringing that to our attention. And I do believe the Fed is slowly recognizing that they're breaking stuff all over the place, not only all across the planet, but also domestically. Try, even as a Fortune 500 company, it's almost impossible to raise money right now. Let's talk about helping animals, favorite part of the week. We donated 3 little piggies. And we have Batman, who was spotted walking down the highway. And now with the pig breeder, they're best friends. And by the way, pigs are some of the most intelligent animals in the world. This one is Wally. He kept getting left behind when his guardians would move. Now he's able to relax in the shade. And he loves fig Newtons and almonds. By the way, in the 90s, I used to live on a diet of fig Newtons and Mountain Dew, highly caffeinated beverage. That's all I ate. And I worked around the clock. And then we have Cameo. He was found as a stray. And he loves belly rubs. So big thank you to everybody for that. We love doing that. Smash the likes if you can. We really appreciate it. And let's go and do some live questions to those 2,600 lovely people out there that are here right now. Appreciate every one of you. And I hope you all got lots of learnings today. Crypto Poppy, if anything was going to transpire because of Sam Bankman-Fried and CZ, it would have already. Do you agree? I think this is a little bit overblown, but in an abundance of caution, I now have pretty much nothing on exchanges. And I did have some trading bags on FTX. I pulled everything off just to be safe, and there was no problems in doing that as well. And I recommend everybody should practice your OPSEC, your operation security, practice self-custody if you have any crypto, get a wallet, and just learn passing things back and forth. Kiwi Robin, love you, man. Big hugs. Thank you so much. Mr. Chili's. CryptoPipe, make sure I go back. I don't think anything is going to happen. This is an Alameda problem, function of FTT. Everybody's talking about it, but it's also rattling everybody. Right now, everybody's so nervous as to how bad the year was in 2022. Nobody's taking any chances. So there is one tiny fear that I do have, and it's probably a 1% chance of happening, and that is the equivalent of a bank run happening to FTX. I just want to close up on that thought. But I think we're going to be just fine, and Sam is a smart guy. He's not going to let things blow up. Mr. Chili's. Any paper trade apps in suggestions? If you had your own fear index, where would it point at this bear market midpoint? 1 equals fear, 10 equals everything is fine. So the first question, paper trade apps, there are a few. There was one I used to use way back in the day, and it was called Think or Swim from Ameritrade. But since then, I just... I do things using a spreadsheet. I tend to do a lot of stuff in a spreadsheet, and I'm just comfortable with that. Second, in terms of fear and greed, there's a lot of shakeout. I think we're way through the worst in the crypto world, as I've been saying for quite some time. June 16th was kind of the bottom of Bitcoin. We've had some fluctuations with some other assets, other crypto assets in the time frame here. But I think crypto is definitely coming out. We might revisit that 19,000, maybe dip under 20K, but I think the 17K again is probably not going to happen. And we're chopping sideways because people need to see us coming out of this kind of Fed lid that I've been talking about. In terms of fear and greed, stock market is rough. Things are being completely oversold, but things are bottoming out. We saw Netflix bottom out. We saw Meta bottoming out. We have Tesla, as I mentioned, is an 18, 19-month low, which is ridiculous considering how much money they're printing. There was a great video over the weekend. I can't remember the name of it, but check it out. Top legendary 79-year-old investor interviewed with Elon Musk, and they talked about some of the great things that they're doing, and it's just mind-blowing. And you watch that video, you'll become incredibly bullish. In terms of my fear level, I think everything is priced in. Everybody believes the Fed is going to burn everything to the ground, so it's priced in. That's why I believe the S&P 500 is 3,500. That's why I believe certain things bottomed. We are still breaking through some lows on some assets, but will we go below 3,500 the S&P 500? I don't think so. I think we had the bottom already. Money's going to deploy. Historically, November and December are gangbuster months. It may not appear that way right now, but we think we're going to get a good CPI print next, because I've been watching the Trueflation data, and that looks really positive. It's just going down per what many people said, like Elon Musk and Cathie Woods. We are definitely, and Tom Lee, going very deflationary very fast. So in terms of 1 being fear, 10 being everything is fine, I'd call it a 6. So just to be, we're not out of the woods yet, but we're further away from max fear. We're closer to everything is fine than max fear, put it that way. That's why I scored a 6. MT, would you do an updated should I buy video and link? I can. I will look into it and see what I can uncover. They have amazing partnerships, still the number 1 Oracle. But again, it's like, in the analogy I always use for Chainlink, it's like investing in an internet service provider in the late 90s instead of investing in an internet company. Like, think investing in imagine a Comcast or something versus investing in Google. You're going to get much better return on things that aren't utilities. And also, case in point, and I've always said this, we have a category we always call them utility tokens, things like the CRO and the FTT token, etc., etc. We always said there's no point in getting them because, again, they're for utility. The money is not in the utility assets. It's more in the layer 1. So, but I will, MT, for you, I'll see what we can come up with and see if we can find a bright spark. I did notice that Link was rallying a little bit over the last 3 or 4 weeks, so it's doing okay. Juju John, Bitcoin is plan B, crypto is plan C. For someone who can't trade besides 1 Bitcoin and 300 Sol, once these are achieved, what would other good long-term goals be? So think about, first of all, when it comes to this type of plan, I do believe those holdings will get you to an equivalent place, and that was based on models. However, if you had come to me in April 2021 and said, okay, it's November 2022, and this is what Solana is doing with all the stuff I covered earlier in the video, I'd say you're kidding me, that's impossible. But here we are. So I remain very, very bullish still on Solana, and I see other people that used to hate it, they're coming over. So that's a good sign too. And it's also still incredibly cheap. We had that little spike to 38. I was tempted to sell. I didn't. I held 38 straight back to 32. Went from 32 to 38 to 32. Anyways, weird stuff. The next stage, I think, would be can't trade. Think about what you want to do next. Think about what the next Solana is or the next Bitcoin. And also, as I urge, have a disruptive asset. Have the best allocator of capital and get a little bit of some of that as well. So from that perspective, just keep on going. And it's a hard question. What I do is when you get to your first goal, say 1 Bitcoin, then try to get to your second goal. Double it, 2 Bitcoin. So 300 Sol, then go to 600 Sol or whatever assets you like as well as you go forward. Next question is from Daniel Lazarevich. Let me see. Thoughts on Gali. Gali. I don't know what Gali token is. I never heard of this asset. And it might be because out of the top 300. Yeah. No market data, no information. I hope it's not one of those people who just want me to mention it to pump it, but there's no information on it, and it's not even listed, not even ranked. So sorry about that, Danielle. And thank you for the question. Renzo Teixeira, look at the Sol chart. Okay, has it pumped since I've been on? Oh, yeah, it's probably messy, but let me see what's going on. Pop open my trading view. I think the whole market kind of sucky right now. Oh dear. Yeah. That means maybe, theoretically, to get back under 30, maybe Sam has been forced to sell some of his Sol to keep the FTT token afloat. That was one theory I was afraid of over the weekend, and it looks like they're probably doing that. They're dumping. But the Alameda bag of Solana is not as big as I thought it was, so that's one good sign. So even if they sold it all, they only own about 1/13 of the entire market cap. Trevor L., everybody panic. Java, thank you so much for your pet. Yes, awesome. And thank you for your super stickers, Jeff Hammer, Artem, Darren Herson, and Zeno V. I appreciate you all. It has been 51 minutes. We got through that pretty quick. And yes, that's a lot of chart sucks. A lot of charts suck right now. But yeah, that was crazy. Anyway, thank you all. Have a good night, and I'll see you tomorrow for Octa On-Chain Technical Analysis Tuesday. Bye all.